Hello, I'm Philip Rawlings, the Roygood Professor of Commercial Law and the Director of the Insurance Law Institute at the Centre for Commercial Law Studies, Queen Mary University of London. I'm also convener for insurance law on the international programme of the University of London. What is insurance? And why is insurance law, and particularly English insurance law, worth studying? It's likely that you're already familiar with the idea of insurance. A homeowner, a motorist, a company all face risks. The house could burn down, the motorist could have an accident, the company's goods could be lost at sea, or its computers could be hacked. The likelihood of some of these events may be low. Houses rarely burn down, but if my house does burn down, the financial consequences for me would be devastating. Similarly, as a motorist, I might not have the resources to compensate someone who's injured by my driving, which would be devastating for me and for the victim. And the company might not be able to survive the loss of goods if the ship on which they're being transported sinks. Of course, insurance doesn't prevent these events from happening, but it does allow me to transfer to an insurance company the financial losses that result. The cost of rebuilding the house, or compensating the road victim, or replacing the goods lost at sea. How it works is that the homeowner, the motorist, or the company pays a premium. In exchange, the insurance company agrees to pay a sum of money if the loss occurs. This is a remarkable sector. Globally, payments for insurance premiums amount to more than $4 trillion each year, which is 7% of the world's gross domestic product. That means insurers have enormous amounts of money to invest. Together, they manage $19 trillion worth of assets, around 11% of all the wealth in the world. Okay, you may be convinced about the importance of insurance, but why study English insurance law? London has been a leading centre of insurance for more than 300 years. It hosts more than 1,300 insurance companies, and in Lloyd's of London, it has a unique insurance market where buyers and sellers of large-scale insurance transact business. The UK's insurance market is truly international. More than 90% of the largest companies in the USA insure at Lloyd's, as do companies from more than 200 other countries. Also, English insurance law is enormously influential, both because of the importance of London as a world centre of insurance and because of the spread of the common law to some of the great trading and finance centres, such as the USA, Canada, Australia, and Singapore, and Hong Kong. What's included in this course? It introduces you to the essential features and principles of English insurance law and insurance contracts, including those made at Lloyd's of London. It starts with the surprisingly difficult problem of how we identify an insurance contract and how we distinguish it from other types of contract that look rather similar. How is it different from a gambling transaction in which I receive a sum of money if a particular event happens, such as Manchester United winning a match? Or what about a promise by the shop which sells me a watch that if it breaks, they'll repair it? This discussion introduces many of the characteristic features of the insurance contract, features that we think about in more detail during this course. For example, in English law, parties to an insurance contract are required to act with utmost good faith. This means there is a duty on those who are negotiating for insurance to disclose to the insurance company facts that are significant to the risk. But a recent reform means that consumers no longer have this duty. And that raises the question, why does it still apply to businesses? And what does the business have to disclose? We'll also discuss the terms of the insurance contract and what they mean. And we'll talk about claims. Here the issue is, when is the insurance company liable to pay? Well, the answer seems absurdly simple. The insurer is liable for those losses that it has agreed in the insurance contract to pay. How can we tell if the loss was caused by something covered in the policy? Well, this depends on the terms of the contract. What has been agreed? If my warehouse containing my goods burns down and I have fire insurance covering the warehouse and the goods, the insurer pays for the loss. But what if some of the goods are damaged not by the fire, but when the fire brigade sprays water on them to prevent the fire from spreading? And what if I rescue goods, put them on the street, and they're stolen? Or what if, in with a claim for £1 million worth of goods that have actually been lost, I insert a claim for a laptop worth £500 which was not destroyed? Of course, the insurer doesn't have to pay for the laptop, but does this fraud, if that's what it is, affect the rest of my claim? Now, the short answer is yes, but why? Finally, for those of you who are concerned about your knowledge of English contract law, don't worry, because you'll learn all you need to know as we progress. This means you'll emerge with an excellent understanding of both contract law and insurance law. Of course, this is only a taste of the fascinating issues that arise in this exciting and important area of the law, and that are discussed in this course.